In the recently concluded Central Economic Work Conference, it was quite clear that China is going to raise up their deficit level, raise more bonds in order to boost consumption, which is one of the few times in history that China placed consumption at a top level. This concept of so-called data assets or data resources are actually quite revolutionary because not many countries in the world elevate data as a means of production and have a national strategy about it to develop an economy based on data. If you look at Xiaomi, the CEO Lei Jun is the founder. He looked at this business as his main legacy, and he invests all his energy into it. The same thing goes with Tencent and all these successful Chinese companies. To talk about entrepreneurship in general in China, if looking at 2025 and even longer future, a big trend I'm observing now is closer alignment between what founder is doing and also what the founder would love to do for their life.
Welcome to Inside the China Room, your premier destination for insights into Chinese current events. I'm your host, Jiang. Today's episode was recorded in the final week of 2024. First, let me take this opportunity to wish all of our listeners a Merry Christmas and a Happy New Year. I hope you are spending this time with your loved ones, that 2024 has been a rewarding year for you, and that 2025 will bring even more surprises and joy. For today's episode, I'm excited to welcome back an old friend, Robert Wu. Robert is the CEO of Big One Lab, an alternative data and research company in China. Robert is also the writer behind two China-focused paid newsletters, Big One Newsletter and the China Translated. If you've been a long-time listener, you might recall that Robert was the guest on the very first episode of this podcast. Recently, Robert launched a personal video-based social media account on the WeChat platform, where she has been sharing his insights on topics like different countries' approach to attract investment, the discussion about the comparison of the accuracy of Western media's coverage on China, and his perspective on Chinese economy. During this holiday season, I couldn't think of a better time to invite Robert back to the show. Today we'll get his outlook for 2025 from the perspective of a Chinese CEO and a leader in the data industry. While we won't be able to cover everything, I'm confident that much of what we discuss will resonate with you. So let's dive in. Hi Robert, welcome back to Inside the China Room.
Hi JJ, hi everyone. Glad to be back.
I'd like to start today's conversation by discussing the market outlook for 2025 that you've been recently shared on your WeChat video account. Could you walk us through your observations, particularly in the context of your meetings with your different countries' clients and your business trips to places like Hong Kong?
Yes, at Big One Lab, we work with many investment firms from across the world, both outside and in China. And I've been visiting clients quite often, every week and every month. So recently, what I found interesting is for the few months after the policy pivot in September, there has been some renewed interest in the Chinese capital market. At least on the equities side, there are more investors paying more attention to it, resulting in higher trading volumes and overall more interest. I think one part of that is because, although many investors still have concerns about China assets at this moment, but at the same time, investors also have concerns about non-China assets. For example, in the U.S. market, the valuation now is really high. Only a few companies being the top companies, top internet platforms, NVIDIA, all these players are the only ones that are actually growing right now. And they are also multi-trillion-dollar company, and overall valuation is very high. And there is also uncertainty about what will happen after Trump finally assumed office. So not just in the U.S., but also in India, in Japan, all these darlings of the capital markets for the last few years have also been quite expensive. So in comparison, China market have been relatively quite cheap. So for many investors, they just have to take a look at China's side. At the same time, there are still some anticipation of what China will do for the next year because in the recently concluded Central Economic Work Conference, it was quite clear that China is going to raise up their deficit level, raise more bonds in order to boost consumption, which is one of the few times in history that China placed consumption at a top level task. So obviously that will have an impact on the overall economy and on many industries, and especially the consumer industries. Exactly how those policies will be implemented, how much of it will be implemented, will have a material impact on the capital market. So I would say, at least many people are paying attention now, and they are doing research and waiting for the inflection points in our domestic consumption.
So you just mentioned that some people pay attention to Chinese equities or markets because their equities are kind of cheap. Does this also mean that some of the assets or equities are kind of undervalued, underrated, based on your perspective?
Yeah, I mean, usually you would say, all the market follow the so-called efficient market hypothesis. All the stock prices already reflect the overall accurate reading of at least expectations of the market, right? Right now there's a China discount, meaning all Chinese stocks on average have a discount in terms of valuation compared with, say, the U.S. stocks. And that discount is undeniable. And I think that discounts come from, the different expectations of the future. You could argue the expectation could be wrong. It could be proven not true in the future so that there may be a chance for this discount to shrink. But at the moment, there is a discount. And so, for savvy investors, they would need to pay attention to the underlying assumptions that make these discounts true in the first place, right? So, for example, people are concerned about domestic consumption in China. People are concerned about deflationary pressure in China. But the thing is, if our policies work, if the economy get out of these pressures, then the expectation will be changed, which will means there could be a big turnaround and comeback in the value of Chinese assets. So that's why these people are paying attention this time.
So you just mentioned about assumptions and expectations. Actually, toward the end of the year, it's common to see experts, scholars, or entrepreneurs deliver their annual speeches. I came across a forecast by economists about China's economy in 2025. He highlighted the consumption trends, mentioning that consumption will return to a more people-centered approach. Offline retail will regain its vibrant atmosphere. Interest-based consumption will resonate with younger generations, and cultural consumption and the rise of Chinese brands going global will gain significant momentum. Your company has actually paid close attention to data on China's consumer market. Could you share your perspective on the trends we might see in China's consumer market in 2025?
Yeah, I think in 2025, many of the trends in 2024 and even as early as 2023 will continue in that more people, especially young people, will pay attention to what you just mentioned, interest-based consumption. What talk about is value-based consumption. So there will be more demand for both physical and spiritual health. So meaning,
Can you elaborate on that? I mean, because,
yeah,
what type of interest?
I mean, if you look at the growing parts, the growing sectors of the last 2 to 3 years in Chinese consumer market, there are some categories that are just keep growing and growing. So a big one is related to outdoor activities and sportswear. For some reason, maybe because of COVID, maybe just because of generational change, more Chinese people now they want to spend time in the outdoor space doing sports, sweating, so all kind of sports, right? I mean, all kind of activities even. So be it from camping to skiing to tennis, all these related categories have been growing because also at the same time, there are also way more facilities than before to help people to do these. When you are doing exercise or when you are outdoor, you enjoy both physical and spiritual enrichment at the same time, right? So that's something I would see more and more even coming into 2025. And then there are also many segments that are I would say purely just provide an emotional and spiritual value for consumers. For example, there is this company called Pop Mart, which is a toy company, but it's not a usual toy for the kids, but it's actually the toy for all ages. And they have very successful product series. People pay a premium to buy those products. They even have another leg of growth, which is international market. So they are one of the few Chinese companies right now who have a really strong brand power in the overseas markets right now. So if you look at the capital market this year, I think Pop Mart is among maybe top 5 or top 10 best performing stocks in China right now. Similarly, you have other companies like there's a jewelry company called Laopu Gold, Laopu Huangjing, which was recently listed in Hong Kong market, also had really good performance. One of their expertise was to manage to find ways to make attractive gold products for the young people and kind of imbuing emotional value to these products. So it's not just like buying or selling a gold bars. It's about buying and selling a artifact, a something that people feel close to. And you can argue that, the whole pet economy is also related to that. People, especially urban people, they want companionship. And so in pets, in cats and dogs, and even other kind of pets, they found this kind of companionship. So I think there's a general trend in that. People want to feel more cherished. They want to feel companionship. They want to feel emotionally positive. So all of these will be the key driving force, I think, for many of the segments in China.
And I also read a report from McKinsey titled The Truth About Chinese Consumptions, which highlights various misconceptions about the Chinese consumer market and identifies potential growth opportunities in specific segments. I think the report once again cites Big One Lab, your company's e-commerce data, demonstrating how locally managed foreign brands continue to hold a dominant position in the sportswear. According to my observation on the short video platform, I think there are lots of local sports brands, people selling that type of product to consumers. It seems that Lululemon, such type of brand, I think your company actually paid lots of attention to Lululemon. I don't know if it is because your team is fascinated by the brand, or is it that Chinese consumers have a special affinity for Lululemon. But can you share with more about your observations on brands like Lululemon, their popularity in the Chinese market?
Yeah, so like in the case of Lulu, we pay attention, a lot of attention to this brand and this company, mainly because our clients are asking for it. Many of our clients who are US based hedge funds and mutual funds, they are heavily invested in Lululemon, which is a multi-billion-dollar company. And actually, if you look at the earnings call transcript of Lulu's management recently, it has been unequivocal that China market has been a key driver of their future growth. As the North American market has kind of stagnated for them, they're already pretty saturated. But now they actually have between 30 to 50% YOY growth rate in China, even last year, in 2024. So we track both online and offline data for Lululemon, and we see both online and offline have been growing rapidly. And I think there are several reasons for that. So first of all, it's closely related to the theme I just pointed out. In general, this eagerness for more health, more emotional value, more meaningfulness in their life. So consumers are really trying to spend more time to do yoga, to do exercises. And so, their taste for sportswear have also increased along the way. So that's one thing. And I think another hidden trend is actually, Lulu is a premium brand. Many of their products are pretty expensive, and it's actually going against the overall trend of so-called consumption downgrade in China. Actually, it's consumption upgrade. But I would argue that in this case, it's also in line with the total consumption downgrade. It's because maybe the people who are buying Lulu today, they used to buy some pure luxury products. So like LV, Chanel, all these luxuries that are as a status symbols for them. maybe some of them, they do not care about status symbol anymore, or not so much. They want to do more exercise, they want to have more space and time and energy for themselves, but still they want to buy something more premium where quality is more assured. It's also consumption downgrade in some way, but it's the consumption downgrade of even more premium demand, kind of converging down to this level of purchase. So that could be also helpful for Lulu.
That's a very interesting point. I also read an article on a WeChat blog recently discussing the recent wave of CEO changes across global companies, including in China, especially I think in the electronic vehicle sector. And actually, I think the concept of CEO is relatively new in China because it was introduced in China around 2000. And the first business leader to call himself a CEO was probably Zhang Ruiming of Haier Group. So over the past 2 decades, I think the general public's concept about CEO is gradually shifting, with more people seems to recognize that a CEO is essentially a high-level employee with limited authority. At the same time, company leadership is also reflecting on whether the CEO system still fits the needs of the times. And also, some founders are realizing that to help their companies navigate the challenges, they need to fully commit themselves and go all in. I recall you recently shared an article titled "Don't Just Gather Resources and People, 不要团局," which advocates for business leaders to fully immerse themselves in their work and lead by example. Could you share your thoughts as someone who has navigated the ups and downs as a CEO in China over the past year? And for those who are looking to start their entrepreneurial journey in China in 2025, what advice would you give to them?
This question is related to what has been, this year there was this big discussion in the Silicon Valley in the U.S. about the so-called founder mode. Basically, there's the idea that an effective, a truly successful CEO has to be someone who are really invested themselves into the company, who are not like an employee, just employed by the board to act as the CEO, but who is essentially the founder, who have a founder mentality to deal with the company. I think this totally makes sense for all companies in the world, not just the US, but also in China as well. Our best companies are all headed by some of the people with the best and the deepest founder mode, right? If you look at Xiaomi, the CEO Lei Jun is the founder. He look at this business as his main legacy, and he invests all his energy into it. Same thing goes with BYD. Same thing goes with Tencent and all these successful Chinese companies. So definitely the number one person are very important. And I think to talk about entrepreneurship in general in China, if looking at 2025 and even longer future, a big trend I'm observing now is a closer alignment between what founder is doing and also what the founder would love to do for their life. What I mean is, in the past, in China, there are so many opportunities. Every business can grow so fast. So there are great opportunities for people to do something that they don't love. They might be selling diapers, but they don't really love babies. I think in the past, it's easier. You can do that. It's very feasible because there are so many opportunities. All you need to do is to find the right market and find the right kind of team, the good management, and you can have results. But I think now it's increasingly hard. The more like double-digit growth are hard to achieve. And generally, there's just many more challenges than before. So for someone to really be a founder mode and to do this thing about something that they don't actually love, don't identify with, it's going to be increasingly hard because it's not justifiable. It's just increasingly not justifiable for someone to do that. So I think on the other hand, there will be entrepreneurs who just want to do the thing they want to do. They just want to achieve something. They have some dream, a very specific dream about something. They have their passion in it. So no matter whether it's growing or not growing for now, they will do it. I think this is the moment for this type of entrepreneurs to shine. When people talk about not many people are founding more companies right now, I think from a number, big data number-wise, it's true. There are fewer people than before who are doing entrepreneurship, who are founding companies. But actually, in our time, if you look at the people who actually are still founding companies, those people tend to be the one who really love it, who are really passionate, and who will do it whenever. So I think these will be the people who are able to grow and who are able to accumulate experience, resources, good team members around them, and who have the chance to win when the tide turns again.
Yeah, I think that's a fantastic perspective. And going back to the topic of data, I think data is actually one of the most thrilling concepts of our era. China's first centrally administered state-owned enterprise specializing in data technology was recently officially established in Shanghai. According to the news, the company will focus on the sharing, development, and utilization of data resources across sectors such as road, rail, waterway, aviation, ports. By integrating logistics, information, and financial flows, I think the company aims to build a national level logistics big data platform, improve efficiency through digital technologies, support the development of the real economy, and reduce logistics costs across society. Could you share your thoughts on the significance of this state-owned enterprise specializing in data technology for the data sector in China?
Yeah, I think I certainly welcome this new development. I've been actually hearing about this new company for some time, and it's great to see it finally being formed. But I also heard that there's still more work to do to actually achieve what they are aiming to achieve. The reason I think it's helpful for the industry as a whole is that in China, most of the data are still what we call siloed. Each company, each platform, yes, each companies, each government departments, internet platforms, banks, all these people have good data, but they actually do not talk to each other. I think the establishment of so-called the National Data Bureau, for example, and also the establishment of the state-owned enterprise that you just mentioned, were all part of this trend or part of this move to really want to kind of lower down the barriers around these data silos. And because after all, data, if it's not integrated, it's not useful. For example, Alibaba, they have their data, Tencent have their data. Both of them have a glimpse of part of what a consumer does, but they do not share data with each other. So they are only look at the partial view. They don't have the full view. So that's one example. I definitely think it's more helpful if there are more initiatives trying to integrate these data together, because the more data is integrated, the more useful it is.
Yeah, I also read an article in the South China Morning Post which quoted you as saying, right now, a key obstacle for commercializing data in China is that data silos, which you just mentioned, are still quite common, restricting the potential for data to be shared and utilized. And the new company should help consolidate and dismantle these data barriers. Also saw recent news about the listing and the financing launch of Haining's urban comprehensive data assets at the Shanghai Data Exchange on November the 13th. Haining is a city of Zhejiang province. And reportedly, these data assets valued at over 200 million yuan primarily consist of low-altitude economy, which is actually a sector that Chinese government has been boosting in recent years. The low-altitude economy data was collected by a local company, and Haining has a population, I think, around 1 million. Though I don't know how much of the population is presented in this data, but I think it's an intriguing case. And Zhu Ming, the former deputy governor of People's Bank of China and former deputy managing director of the IMF, highlighted recently that the global economy is entering a prolonged period of low growth, a defining new characteristic. He emphasized that the importance of understanding this shift and pointed to the opportunities presented by the capitalization of data. Given this context, I want to hear your thoughts on the evolution of data as an asset over the past year in China. I think last time you came to my show, I think it was around the February of 2023. So actually almost 2 years has passed. Where do you see the key changes and the opportunities in the past 2 years and in the data sectors in China in the future?
I think one thing we have to be really direct is, this concept of so-called data assets or data resources are actually quite revolutionary, because not many countries in the world elevate data as a means of production and have a national strategy about it to develop an economy based on data. And that has both plus and minus. So the plus thing is, yes, we look at this really integrated way, we look at it comprehensively, and we really want to create a big use case out of the data. But also the downside is, the reason that many countries in the world do not point to data as an asset is because they have already become an asset. They have become an asset not by government directives. They have become an asset because of market mechanisms of trading between market players of all types of data. So if you look at our industry, alternative data industry in the US, it has been really advanced. All industries and all sectors have data makers, producers, and buyers, and it's a great ecosystem. While in China, our industry is only fledgling. It's very small and it's emerging sector, but it's nothing compared with what the US has. I think at the end of the day, it really doesn't matter whether it's defined by what. What matters is in a freely traded market, can people see the value of data? And can the right people who can work on good data and turn them into good products that other people can buy? So have a real market where people have freedom to trade and to build things on. That essentially will be the ultimate driver for this industry. So what my advice would be, just try to place fewer restrictions on these data trading, encourage more use cases. When there are successful use cases, promote them, let more people know about it. Just in general, be more open-minded, just help foster the market, but do not create the market.
So is the case of Haining kind of common in other countries that certain sector about a city's data was kind of being available at a data exchange center?
Yeah, I'd say it's really innovative. Well, that's what I mean. China has been a pioneer in this case. I think what really we would need to pay attention to is, are these values real? I mean, do people pay for it, or is just a listed price? So I think that's a big question mark here. And it's only if when actual people, actual market players actively paying for it and you have a recurring cash flow, then you are a real asset. I think now there are good concepts, but whether it can become a real solid cash generating asset, I think we'll still have to wait and look.
I think that makes sense. And before we move to the recommendations session, I will have one more important question about 2025 to ask you, which actually you touched a little bit at the very beginning of our conversation today, the China-U.S. relations. On January the 20th, Trump will begin his second presidential term. I noticed that on your personal newsletter platform, China Translated, you have recently launched a new column called The Great Divorce. Interestingly, this analogy of marriage was also used by a top Chinese official 9 years ago, and you can still find that report on CPC's official website. Could you share your thoughts on the potential trajectory of China-U.S. relations in 2025? What practical steps can ordinary people take to navigate this period with stability?
I thought about this concept, the Great Divorce, when I thought about another concept, which many people said that, US and China are in Cold War 2.0 or the second Cold War. It bothers me that I don't think we are in a Cold War. It's very different from, say, the real Cold War between US and Soviet Union many decades ago. I think there are just many differences. So we are certainly not as ideologically opposed to each other. China does not want to change the US system. Not as the Soviet Union, they sponsor revolutions and regime changes everywhere in the world. They're just like the US, doing similar things against each other, right? We don't plant missiles in Cuba. And also, our economy is way more integrated with the rest of the world than the Soviet Union ever was. So I don't think it's a good analogy. And it's actually a pretty bad analogy because that will condition your mindset to a war mindset, which could eventually bring war, which would be the most dangerous thing between China and the US. When I think about US-China, I really thought it was like a marriage that gone sour. Back in the 70s, the US and China were really friendly with each other. They have a great courtship, then great courting with each other. At the time, they have a common enemy. But when the common enemy, Soviet Union, was no more, the relationship deepened. And, US would want to absorb China into their system and would maybe eventually want to change China in the mode of Americans and the Westerners. Yeah, but I think right now it's undeniable that part of marriage was over. The honeymoon was over, right? But the thing is, what I would just want to emphasize is that when two people get divorced, they can still be friends, quote unquote friends, right? Divorcees do not have to kill each other. They don't have to prove to each other that they are the stronger and the more correct person. It's just divorce. So let's just treat it
You still have
professionally.
a baby to raise.
Yes, exactly. They have so many things in common. They have babies, they have all the relatives, friends around them. All these are stakeholders, right? I mean, this world was not just made of US and China. There are so many other countries and so many other people as well. And there's common problems faced by everyone. Climate change, terrorism, regional conflicts all around the world. All these are common problems that even if two people, they are divorced, they're not in a marriage, they don't sleep in the same bed anymore, they can still talk to each other and find a way to manage these differences. So that's why I think a right analogy, a more correct analogy is important. So I think if we think of it as a kind of a divorce, but not a war, then you will think about, so maybe it's, first of all, it's not the end of the world. It will not lead to a disastrous consequence, or at least we should try not to. And it's also inevitable that the so-called decoupling will just happen more and more. More Chinese businesses will not be able to access the American market. So are the US companies. They are trying to get away from China as much as possible. That's fine. Those two people don't want to talk to each other anymore. That's fine. But at the same time, the world still exists. So there are many other players in the world. For example, the China still has to do a lot with the foreign partners. There are Europeans, there are Middle Easterns, there are Latin Americans, there are ASEAN. So all these regions, they could stand to benefit from closer relationship with China, maybe even closer relationship with the US as well. Both powers want to have more friends, basically, in the global economy. I think maybe one strategy for people and companies are to identify these countries or companies that are best positioned to enjoy the best from the two worlds. I think there are a lot like that, right? If you think about Singapore, if you think about Vietnam, all these countries have adjusted their diplomatic policies to really not to pick sides, but to benefit from both sides. And that could be a positive effect of this divorce. This divorce could actually help spread positive wealth around the world. So I think it's a challenge, but opportunity for many people in the world right now.
So when you make your business plan for your company in 2025, does the China and US relationship play a very significant role, thinking about the future of the company?
I think it does to some extent. So, for example, maybe 5 years ago, when we do startups in China, we will think of eventually IPO in NASDAQ. I think right now that part is not feasible. We will not assume we'll do that. I think that's the big picture thing. But just to look at day to day, though, I think it's less relevant, I would say. We are not like huge company. We're like Apple or Tesla. We don't worry about these things on a day-to-day basis. I think we are small enough to have problems that are mostly just about ourselves. We just need to fix our own issues and we should do great.
Great. So let's move to the recommendation session. We invite every guest of our podcast to recommend something to our listeners. It can be a book, a movie, a TV series, a podcast, or even a video game. I think last time, Robert, you recommended us the Three Body Problem TV series, which is great. What do you have us today?
Yeah, it's a TV series I mentioned in my, yes, another TV series. Another TV series I mentioned in my personal newsletter, China Translated, a few months ago. It's a really popular Chinese drama series. In Chinese, it's called 我的阿勒泰. In English, it's called To the Wonder. It's a very unique drama, precisely because it has a lack of drama. It's a mini series of, I think I remember it's about 10 episodes, so really short. Most Chinese series are really long, winding.
You finished watching all of them?
Yeah, I finished watch all of them very quickly. Only 10 episodes. Most other Chinese series are long and winding. This one short, succinct, easy. It's taken place in the northern part of the Xinjiang province. It's called Altai. Beautiful mountains, almost like Switzerland, and it documented the stories of some locals, both Han ethnic people and local Kazakhs and local Mongolians, and it's just about them moving from one place to another and all these little stories of that movement. I really recommend it because it really gives you an idea of what many modern Chinese, especially young Chinese, are thinking about in their life. In one of the very famous scenes, the main protagonist, she was like asking her mother whether she was basically not able to do anything, not smart enough. And basically her mother said, what's the use of being smart? Just look at the trees over there, the grass over there. Do they care that they want to be recognized by other people? They don't. They just stand there, to be of themselves, and they're beautiful and they're good of themselves. So I think that's actually a big change from the traditional mindset in China, if you think about it. It's happening. The ground is shifting, I think. The younger generations, they're having different value systems than previous generations. The fact that they can be so successful can give you a good idea of what many of the younger generations are thinking about these days.
Yeah, I watched some clips of the show. I think it's a great show for holiday seasons. So I'm going to watch that. And I think I agree with you. I think it reflects a more healthy mindset of the new generation, which is pretty important, right?
Yes.
Recognize the individual value, recognizing the nature, find peace for every individual. That's very important.
Yeah.
Great conversation for the holiday season today, and thank you very much for coming back to our show. Looking forward to talk to you soon in the future, and I hope that you and your company have a very, very productive 2025 in the coming year. All right, thank you, Robert.
Thank you so much.
Thank you for listening to the Inside the China Room podcast. For cooperation, investing, or feedback, you can email me directly at jjiang.sisu@hotmail.com. Alternatively, please consider leaving a rating and a review on Apple Podcasts, Spotify, or Substack. If you find our podcast helpful, we would be delighted if you recommend it to others. See you next time and take care.